Welcome to Java. Thank you all kindly for joining me. It's April 7th, 2025, and it is also Monday, so I hope everyone had a wonderful weekend. It was quite the week last week. Now, the sell-off hit quite heavy between Thursday and Friday. It did officially put the NASDAQ into bear territory, so I am calling this episode in particular is the Gambit Part 2 from Queen's Gambit Part 1 that I did yesterday, because we're going to follow through with some of the ideas that had gone through yesterday. So with this, overnight, I told you I'd be looking at the markets over in Asia, which dropped significantly. As a matter of fact, the Nikkei, or Japanese market, came to a halt. So this is because it dropped more than 8%, so that halted trading for a bit there. European shares and trading also dropped. Now let's go into what is driving the United States market prior to the open. So Fear Group meter, we're at 4. So this is the lowest that I have seen this quite some time, extreme fear. So this is the start of the environment that begins to breed opportunities. This is what one would call, I'm calling it blood mode. A bit of blood in the streets could be worse. There is more that could fall. They're talking 6 to 8% is the general consensus. However, in general, nothing goes in a straight line. So for today, right now, I am saying that this is a little bit overcooked. Now we've got Treasury Secretary Bessent saying there's no reason for markets to price in a recession. Well, I kind of agree with that because I think we're already in one at this point in time. Now, we're watching the stock market fall, but the economy has already been hurting for some time. I'm going to posit a couple of alternate views than what the mainstream media has regarding the tariffs and what we're looking at forward. So, with this, we're going to take a look at the 10-year yield. Now, it's below 4% at the moment, but is rapidly approaching back up to 4. It actually is increasing at the moment, and the relative strength of the dollar also increasing back towards 103. Now, gauging this in relative strength to the other currencies, the dollar is gaining. So overall inflation is still weakening as far as purchasing power. But what this is doing is this is kind of stabilizing within the markets, if you will. Now, with this, we did watch quite a bit of a drop. We've got Jim Cramer is calling for a massive sell-off today. So I am going to take the opposite side of that one. Now, we've seen quite a bit of drop. Bitcoin is now below the 80,000 level. As a matter of fact, it hit just above 74,000, which was one of my first levels. So I did get some buys in, but didn't trigger the 72,000. It may not. We'll see how things go from here. But I'm going to talk about a few other things that are probably affecting this as well. Now, if we look at the United States markets on the open, it looks as if they're very weak, and the futures are saying they're going to continue down at least for a bit. We've got the volatility spiking. It's 15.65% at the moment. This means that opening is going to be very weak. Bit more sell-off is what this looks like it is pointing towards. However, the markets are already showing a bit of a curl and a little bit of a recovery. I'm watching the volume is picking up just a bit. And if the retailers do their retailing, as they do, even though it's lower volume, we can expect a bit of a pickup. They might even possibly be going into green before the end of the first hour of the day. So caution if you're shorting. Now, gold dropped also a bit, holding above 3,000. So this is telling there's a bit of strength in the underlying. Now, the story here today is oil. Oil dropped significantly below $60 per barrel. Now, this is with a couple of things paired together. Now, the Saudis first dropped the price, and paired with dropping the price, they also increased the supply. So if you have more supply and you drop the price, it's going to drop the price even further. And we're looking at demand dropping possibly in the future. So this is a large marker of demand coming down. the economy dropping a bit, but also this could drop prices and inflation, at least temporarily. So with this, we had silver go on sale. It's already back above the $30 level. So hopefully you got to pick some up. However, what I noticed is that real physical silver also comes at a premium, and premiums jumped because demand went up. This is a story of its own. So you've got to stack real assets. We're running short on time before the real move kicks in. So if you haven't already, good time to get back in and purchase. Now we've got the Fed on deck saying jobs are strong. In fact, the numbers came in a bit too strong. I expect that number to be revised. But at the moment, they're using this to say that the economy is strong. So they don't have to do cuts. This hurt the market further on Friday. As I said, Asia and the EU both got crushed in their markets overnight. And with all of this tariff talk, we've got negotiations for over 50 countries already in order. Now, today, Bibi, this is Prime Minister of Israel, coming to visit today and speak with Donald Trump about tariffs. Ishiba from Japan is going to have a phone call with him, expected to do a bit of negotiating there. And as I said, 50 other countries are expecting to begin their negotiations. Now, Germany is intending on staying strong. They want a very strong forward approach, a little bit opposite of this. They plan on fighting these. And Ireland is planning on making deals, want to be one of the early ones in on getting the better deals. So, two entirely different approaches there. We're going to see how that works out for each of them. Another thing I want to bring up, first off, we'll jump over. Jerome Powell is warning that the tariffs could cause high inflation to be here to stay. Well, high inflation is here to stay anyway. The only thing that would change that is a massive depression or recession. So when people stop purchasing even the necessary items or cut back on them, that is the only thing that cuts inflation, because companies start pulling back and they start firing people. So unemployment increases and it causes that death spiral. But that does bring prices down. So with this, we'll look at rates and banks. I want to talk about this a little bit. Now, all of this stuff going on in the media is to take your attention off of these. Now, going back to the 10-year yield, we've also got the 30-year not moving. Now, this is going to hit two industries. First off, with rates with the banks. Their earnings report Friday. We're going to see how they do, but this is a short-term opportunity while these will drop for the banks to reinvest in a lot of their investments, cut their risk, reassess themselves, get themselves in a better position while all of this blood is in the streets. And we're going to hear from them for the last quarter on Friday. Now, the other flip side of this is mortgages. Now, mortgages are owned by the bank, so they can redo their term debt. But with mortgages, this is going to affect more the population. People are going to refinance their larger interest rate loans. And also this could affect the purchasing market in real estate. Now, if this does, this could increase the perceived wealth effect. And this could actually cause a boom in the markets, as people will spend more if this causes purchasing in the real estate, causing a short-term boom. Now, something else will pair with this as well. I spoke about the oil and price drop, so this could give a bit of relief between builders. So with mortgage rates dropping, that increases demand. And then also the cost of production is in short what oil does, and that could give them a double spike with that. Now, also with this, I'll talk about this in a moment, companies getting creative in finding ways to limit the impact of the tariffs. Now, this is kind of a brilliant way that they got everyone to load up on their goods in saying that they're going to massively increase in their price within a couple of weeks. So purchase everything, stock up now. So this is going to show up in the next reports for the economy, with all of the companies stocking up as well as retailers buying everything they possibly can prior to what they think is going to be a price increase. So short-term boon for the economy. Going to go back to the calendar. Now, this is from yesterday, not too much going on Monday, Tuesday. Wednesday, we will get the FOMC meeting, so not too much today, depending on what the Fed speakers say. I left this up here for anyone that is interested in going to the safe haven asset trades, XLP, XLU, and the two that have been hit, XLK in tech and XLY is discretionary. I am not recommending XLY at this point in time. It's got quite a bit more to fall prior to setting levels, but XLU might have some good, XLK might have some good levels today. So shifting over to Bessent, Treasury Secretary rejecting warnings of a recession. He's telling everyone they should just sit back, take in the tariffs before they have a reaction. And again, talking about everyone wants to come in and negotiate. So this is the whole game of that gambit. And what we're seeing for the most part, it is working. Now, the current United States administration has gotten the upper hand for most of the countries. There are a few outliers. As I said, Germany is going to be a little bit difficult. We've got China as the large outlier and may also benefit from all of this if it does not turn out the way that they expect all of this to. So for the most part, a lot of countries coming in wanting to negotiate with them. And then on the other side, we've got the EU saying they're still considering a little bit stronger measures. So all of this, it's quite a bit to take in. But at the moment, it looks like they've got a boon with businesses stocking up early through the threat of higher prices later, making them all purchase now, as well as the negotiations that they've kind of forced everyone to the table. So it's really a strong approach for the moment. It's working despite all of the pushback with it. It actually could work out. So where are companies getting hit? Well, cryptocurrencies took quite a hit. Going over to the company was MicroStrategy. Now Strategy treading water on his Bitcoin bet, this Michael Saylor. And they're talking about, did he build this company on a house of cards? Now, if you're curious, his buy-in point now, the average cost basis is now at 67,458. I don't believe it's going to hit this level. What this means is he's not in trouble as long as it stays above this price point. Now, unlike Michael Saylor, had a couple of major bettors in the Ethereum market, and apparently they're losing. So one got liquidated for 106 million, and another one had to make an emergency deposit in order to avoid liquidation, as well as what we're seeing is these are a lot of margin calls. Now, this is the threat for this morning on opening, but a lot of these hedge funds, it appears that they have done the same thing. They've done emergency deposits, shifted the assets, and avoided for now the margin calls, which also cause squeeze plays, if you will. So these are where the massive moves happen. Now, I want to talk about the halts in trading just for a bit. CME Group, when this happens, they've got what they call stock circuit breakers. These are at 7% drops, 13% drops, and 20% drops. Now, the 7 and 13 each would cause 15-minute trading halts that you can't trade the securities during that time. If it happens after 3:25 p.m. for the market time, then they will not halt unless they hit 20%, because it's toward the end of the day, and that's the final hour. So with this, just want to let you know that's what those markers are. Now, I've got two other things I want to talk about. All of this is heading towards the CBDC cryptocurrency payments. So very quietly in the background, JP Morgan and Axis are partnering to boost blockchain-based payments, even though JP Morgan is still loudly denouncing cryptocurrency payments. And on the other side, for the payment rails, so to speak, SWIFT is the popular payment system internationally that they cut Russia out of, sanction them out of. They're partnering with Prime XBT, which is basically providing the wallet for these. And NetTeller is for retail traders. So putting this together, what this means, the three of these going together this is the setup so that the Federal Reserve can service retail traders and common accounts. So right now, they're not allowed to do this, and they only set up as a bank to other banks. Now, if they successfully set this up, they can have independent accounts directly through these wallets and do direct business with people. That means they will be eliminating the smaller medium banks. I also want to put out warning that there are other flags in the banking system. If you've still got money in the bank, I'm not sure why. I get it out as soon as possible. There's a lot of fluctuations and it's getting even more unstable as we speak. So if you've still got money, cash in the bank, cash in your hand, physical cash, is not the same as having it deposited in one of these institutions. So I just want to make that final warning. I've got a lot of other things going on. So with this, that's quite a bit. I hope you have a wonderful trading day or just a good day if you're not trading. Until I see you again, stay free.